It's Tuesday, March 25th, and this is your Stock Market Daily News podcast. Yesterday, U.S. stocks rebounded sharply as volatility continued to grip global markets. The S&P 500 finished up nearly 1.7%, the Dow Jones gained over 400 points, and the Nasdaq jumped more than 2%. Tensions in the Middle East drove wild swings in oil, while market pros tried to separate signal from noise. We'll dig into the day's most impactful stories across global events, key stocks, and what drove yesterday's dramatic moves. Let's get right to it. First up, the energy roller coaster. Oil markets saw a tidal wave of trading, with over $500 million in Brent and WTI futures traded just minutes before President Trump posted on social media about productive talks with Iran. Brent crude plunged below $100 after the post, only to rebound above $103 as Iranian officials denied any negotiations. That volatility sent shockwaves through energy stocks, with Chevron and ExxonMobil both gaining early, then retreating as the session wore on. For investors, this highlights just how sensitive oil and your portfolio remain to every headline out of the Gulf. Switching to Washington, Senator Markwayne Mullin is under the microscope after disclosures showed he bought up to $50,000 each in Chevron and Raytheon stock just days before U.S. forces captured Venezuela's former leader Maduro. Both stocks rallied on the news, raising eyebrows about potential conflicts of interest in D.C. For investors, this is another reminder to watch how policy moves and political events can drive sector winners and ignite controversy. Turning to the bond market, U.S. Treasury yields surged to multi-month highs, with the 10-year flirting with 4.5%. Markets are now pricing in fewer Fed rate cuts as investors weigh sticky inflation against the economic fallout of higher borrowing costs. With the 10-year closing in on the 4.5 to 4.6% line in the sand, risk assets like stocks and Bitcoin could see renewed pressure if yields break higher. If rates keep climbing, expect continued volatility in equities and heavier scrutiny of central bank policy. On the crypto front, Bitcoin defied the geopolitical turbulence, closing up more than 4% at $71,400. While Bitcoin held recent gains, the key level to watch is $75,000. Technical analysts say a breakout above this resistance could kickstart a new bull phase, while any retreat may test support near the 68,000 mark. For traders, keep an eye on those key round numbers and watch how crypto sentiment tracks global risk appetite. Let's touch on financials. HDFC Bank in India grabbed headlines as prominent analysts called it a screaming buy, despite market jitters and governance questions. The stock is trading at about 1.6 times price to book, nearly half its historical valuation. Bulls see the pullback as a rare opportunity, especially if India's growth engines rev up again. The takeaway? Even as uncertainty looms, long-term investors may find value surfacing in major banking names, especially in high-growth markets. And in stock exchange innovation, the New York Stock Exchange announced a partnership with blockchain firm Securitize to develop infrastructure for tokenized stock trading. This could pave the way for 24/7 trading and near-instant settlements, introducing new efficiency, but also regulatory scrutiny, into equity markets. Keep this on your radar if you're following trends at the intersection of crypto and traditional finance. To recap, the S&P 500 closed above 5,200, the Dow near 39,900, and the Nasdaq at 16,400 after a volatile, headline-driven session. Themes to watch: oil and energy volatility, rising U.S. yields, and innovation in digital markets. Looking ahead, keep an eye on Wednesday's durable goods report and comments from Fed officials that could shift both rates and risk sentiment. Don't forget to subscribe for your daily market updates, follow us online, and stay ahead on Stock Market Daily News. Thanks for tuning in and have a great trading day.